Hi everybody. Today I want to talk about one of the best performing chart patterns and swing trading techniques right now in the market. And what I'm looking at right now is a chart of MKSI. And recently the semiconductors pulled back sharply, and a lot of the top stocks in the market pulled back 10-15% or more. Many of these became oversold and set up a really good reversal pattern. And this pattern seems to work time and time again, even if the market's not really moving strongly, and even if we're outside of earnings season without much of a catalyst going on, this pattern tends to do really, really well. So if you're waiting for earnings season or you're waiting for more good setups to come up, this is a really good trading setup to learn and understand. And this is a good example on MKSI, and we mentioned this last week in the weekly alert in our closing comments, and it's a stock that really pulled back sharply. No real news on the stock and the industry, much to speak of. That is just an overextended pullback in a long-term uptrend, or it would appear, and we'll have to see if lower highs and then lower lows, and does so with a lot of volume, and see how it sets up in terms of the technicals and chart pattern and so forth. But right here we can see that sharp pullback starting right here, and we made some money off this breakout here. Took some off around here and then stopped the rest at our entry point using the instructions on the site. But then after it pulled back, we watched it closely to see if it got oversold on RSI. And what we noticed on this was that it came back to the prior consolidation area and found support there. So we wanted to see the bottom of this support level through this consolidation to act as support as it came down through here with a lot of strength, so to speak, on the downside. And we said last Monday that it looked like it found some support here. We don't see any really reason why it pulled back this much, other than it's just a pullback in a longer-term uptrend. And we saw this candle here, and we said that a good aggressive entry point would be a break above this candle right here, because that's actually a bullish candlestick after a long downtrend. And sure enough, you could have put the your entry right above this candle here, put a stop right below the prior low, and that's not a real high probability trade. It's pretty good, but it's not great. There's actually another entry here that was excellent and fell under the guidelines in the course, the explosive bottoming pattern, and it hit the entry point and it moved a lot already and made a real nice profit for those using the course. But when you see that long-term uptrend, you see that pullback into the prior consolidation, and that prior consolidation holding, at least the bottom of the consolidation holding, that's a good sign. And if you can find a good bullish entry point, bullish candlestick pattern, ideally the explosive bottoming pattern that we talked about in our course, and you want to make sure you know where all the key resistance areas are. They're not listed here on this chart. This is a chart that I just had up, but there's other resistance levels here on this chart that I'll go over in the course. There are several of them to know and understand, but that's a good setup to look for. That pullback into a prior support, and that support's holding. You get that bullish explosive bottoming pattern set up with the right sort of window to the next level of resistance, and you can have a quick 4 to 10% in this case within 2 days, and that's a very, very good reversal pattern in nearly all markets. So even a market that's not really trending strongly like we see right now. So the great thing about this pattern too is that you don't have to do it on penny stocks or stocks under $10. On this trade, you can go ahead and enter a position near the ideal entry point with that course. You could put in anywhere from 3,000 or 4,000. If we don't use margin ourselves that much, but if you want to use margin and if you feel like you need to and you do that anyways, you can go in here with $5,000-$10,000, or you could enter a position for $100,000 and $200,000. So as your account grows over time with a very high probability trade, you can still use the same technique and still use the same strategy. Okay, you're not going to have to worry about slippage so much, and you can scale this up with your account over time to hundreds of $1,000s or millions of dollars. and still have a very high probability trade without the slippage and without all the problems and risk with penny stocks. So this is a great trading setup, and worked out really well again. We also took a trade on AEIS, which also formed the same pattern. It wasn't mentioned in the newsletter, but those that have the course were able to identify this if they were looking for it. But similar type of pattern, and it's already made a nice move, and it could move a lot further, or it could come back and test these lows here and actually move lower. That's a possibility. But either way, we've already got out with a nice profit and stopped the rest at our entry point or a little above there. So that's a really high percentage trade for if you like, short-term swing trades of anywhere from a few hours or an hour even up to a few days, 7-8 days. That's a great strategy that continues to work really well. And again, it scales well to large account sizes. You're not stuck with, going in on a penny stock, on a $5 stock, and then pushing the stock up 10, 20 cents when you enter the trade. And then when you get out, you have the same slippage on the downside. So you don't have to worry about that with this kind of trade. And it, again, scales well to large account sizes. So that trade continues to work really well. And we had a couple bull flag patterns recently as well. We had a trade on PETS, well-formed bull flag pattern, and it hit the entry point, and it moved about 4 or 5% or so. So we took some off, stopped at the entry point, and it looked like it was going to go higher again. But when you have these markets that are real quiet ahead of earnings in the summer, especially, sometimes you just don't get the follow through. And this one came back and got stopped at the entry point here for the remainder of the position. So we took some profits up here and cut the rest near entry point. And the same thing happened with VRX, which had a real nice, bull flag pattern set up here. Not quite enough consolidation. I'd like to see, 4 or 5 days of a horizontal consolidation before the breakout. But it broke out. It went above the ideal entry point. So we wait until it comes back to here, tests this area, and then ideally swings around and goes up and makes a bigger move. And in this case, even though it's a very undervalued stock, and even though it's starting a new uptrend and it's breaking the long-term uptrend, it's actually above the 200-day moving average. Again, with a slower summer market, a lot of times these just don't, follow through and carry through. So we stopped that pretty close to the entry point as well without that strong follow through in that trade. But again, those bottoming patterns are working really, really well right now. So those that have the course, be sure to follow it closely, and again, stick with primarily stocks above $20. I mean, we did see and traded a bottoming pattern recently on Pandora, and it's actually setting up another one potentially for this evening. But we got in here in this area around 750 or so, and it made a 20-30% move within a few days. We've got another one potentially setting up tonight, or tomorrow, I should say, on this as well. So you may want to, check out the course, make sure you understand it, and look for that. Look to see if it hits the entry point tomorrow. About half the time they hit the entry point, and about half the time they don't. Okay, so when it hits the entry point, that's when you want to jump in. You don't want to get in too early on these trades, and you want to make sure you completely understand the setup and all the details of it, because if it doesn't meet all the requirements, then it's a lot less likely to make a big move. Sure, a lot of stocks get oversold, but that doesn't mean that it's going to come out of oversold levels. And if you don't have a real understanding of resistance levels and where the stock will tend to find that resistance, then a lot of these will fail, especially in the summertime. So definitely understand all the rules in that trading strategy before embarking on it. But it's still working really, really well. And we had another one on RH, Restoration Hardware, that made a 50% move within a few weeks out of this pattern. And again, it's something where you can jump into this with either 100,000 shares, 1,000 shares, 100 shares, 50 shares. You can scale this very easily to large account sizes as your account grows over time. And that's really important to think of and to keep in mind, is that you have more reliability a less risky trade, and you've got one that can scale to large account sizes very, very easily. And if you stick with the right stocks that we talk about in the videos, in the course, you'll see a lot better reliability and sleep better at night and have a lot, probably a lot better results, as most people do with swing trading, these higher price stocks that are just more reliable. Okay, that's about it for now. And thanks, guys, for listening. And get ready for earnings season 2. It's coming up here in a few days. And so far, it looks like it may be a good earnings season, but we'll have a lot of stocks, dozens of stocks that fit the criteria in our earnings eruptions course. And we'll be updating you with the trading results as time goes on. And that first quarter was really, really great for that. And we'll have a lot of big earnings beats that we can trade profitably in the weeks ahead. So that's coming up later this week and for the next few weeks. So exciting times. So thanks for watching today. If you liked the video, give it a thumbs up below. And be sure to tap my image here to get notified when our next video is published. And if you haven't yet, tap here to get our top 2 trading opportunities for the coming week emailed to you. Stocks with the right technicals and fundamentals to make a big move higher. And if you want to learn one of my best strategies, tap here and you can learn how to do it yourself.